Welcome back to this special series, Lehman Crisis 10 years on. We have been speaking with the man who at that time was on the hot seat, Dr. D. Subbarao, former Governor, Reserve Bank of India. He had been only 10 days as RBI Governor when Lehman filed for bankruptcy. Dr. Subbarao, we were talking about the coordinated actions that the Reserve Bank and the government were taking. I know that there were a significant increase in fiscal deficit that year. We had started off with something like 2.5 or 2.6% fiscal deficit when you were finance secretary and the budget was announced. And by the end of the year, for 2008-9, the fiscal deficit, I think, was 3.5%. There were also significant cuts in monetary policy. I think the repo rate came down all the way from, I think, 8 or 9% to 3.25% over a 2-year period. Now, when you look back at those actions, do all of them look justified to you? Do you think you would have done anything differently now?
That's a very big question, but let me confine myself to the monetary policy part of it, because I was in the Reserve Bank when Lehman Brothers collapsed. We did a number of things in the weeks and months following the crisis. Like you said, we'd cut the CRR and SLR to historically low levels. We cut the repo rate, like you said, 8.5% or 9% when I took over from Dr. Reddy, who was still fighting inflation. Then I think over 4 months or 6 months, we brought it down all the way from 9% to as low as 3.5%. We did take a number of steps to increase liquidity, rupee liquidity, as well as foreign exchange liquidity, relaxed the norms for ECB, external commercial borrowing, for NRI deposits. We did some unconventional things as well. Although the general impression is that all that we did was the textbook orthodox central banking, but we did unconventional things by relative terms. Like, for example, the Reserve Bank instituted a line of credit for specially helping non-bank finance companies and mutual funds. We instituted a line of credit for SIDB and NHB, which were, quite unorthodox in relative terms. So we did a number of things in those years, in those weeks and months. To answer your question, looking back, I don't believe that I would have done anything differently in terms of actions. Because if you look back, like we talked earlier, the markets were hit by a lack of confidence, exchange rate had nosedived, inflation had come down, growth was decelerating, stock market had collapsed, capital was fleeing. So all these things we had to do in order to restore confidence, and the best or the most effective way of restoring confidence is to infuse the system with both rupee and foreign exchange liquidity. So I don't think I would have done anything differently in that, in terms of the content of policy. But one place where I would have done differently was communication. Everywhere around the world, central banks were communicating more deliberately during the crisis, and so were we in the Reserve Bank. But I think since you asked me a searching question, what would you have done differently, perhaps I would have communicated more frequently and more deliberately.
Okay. Well, now when we look back, at the moment we are still fighting a large increase in NPA that has bedeviled us from 2012 onwards. Maybe it got recognized forcibly, perhaps, by the Asset Quality Review in 2015 and thereafter. Recent history is well known. Now, some of it is traced back to the regulatory forbearance given at that time. If a loan was going bad, banks had to keep 5% provision and restructure it.
Sure.
Do you think that perhaps was kept for too long, or was too much of a leeway given?
In some sense, I have to agree with you. Today NPA is a big problem, one of the biggest problems, coming in the way of India's growth and development. Certainly over the last 5 years, authorities in India are fighting the NPA problem. And there are a number of causes for it. It's not, a problem as complex as this does not have a simple or a single cause. But certainly, one of the contributing factors to the growth in NPAs was the regulatory forbearance, like you called it, during the crisis. We had asked banks to restructure accounts in order to keep the flow of credit going. But the express indication, express mandate of the Reserve Bank to banks was to restructure only those accounts which are illiquid because of the crisis, not to restructure accounts which are insolvent. But it's quite possible that in all the anxiety, uncertainty at that time, some insolvent accounts too might have been restructured. And certainly the regulatory forbearance at that time was a contributing factor to the NPA, although I would want to emphasize once again that a number of factors that have resulted in the NPA problem.
Well, of course, global slowdown and decision from courts and everything contributed. Dr. Subbarao, finally, let me ask you about quantitative easing. You know, the emerging markets like India synchronized and cut rates at that time, maybe for our own good. But when quantitative easing got withdrawn, or the first bugle was sounded by Ben Bernanke, what is now famous as taper tantrum, do you think that could have been done better?
Well, everything could have been done better with the benefit of hindsight, right? That's axiomatically true in public policy, but you must remember that people who make public policy act in real time, act within the universe of knowledge available to them at that time. That was the case with every central bank, every government around the world. That was the case with the government of India and with the Reserve Bank of India in our country. Coming back to quantitative easing, the specific question, the goal of quantitative easing was, I think, in my view, two goals. First, to repair broken financial markets, and the second, to stimulate domestic demand in their own countries. I think quantitative easing fulfilled the first objective of repairing financial markets, but it did not fulfill the second objective of stimulating demand, and all that money, which was expected that will be borrowed and used in their own jurisdictions, fled to emerging economies such as India over 2010, 2011, 2012, and put pressure on our financial system and on our exchange rate. Normally, when you run a current account deficit year on year, like we did from 2010 to 2013, there should have been some signals coming, like the exchange rate would have depreciated or the cost of ECB would have gone up, but that did not happen because we were lulled in this quantitative easing money was coming. And we did not get the signals, so the pressure built up in our external sector. Yes, the rupee tantrums we had in 2013 in the last months of my tenure were a consequence of this quantitative easing and our inability to catch the signals and make the adjustment in the right time. But whether it was because of Ben Bernanke's statement, I can't agree with you, because we knew, right? Even when QE started, we knew it was going to be tapered at some point of time. So merely because he said it, to accuse him or to criticize him or to charge him with being thoughtless, I think would be inappropriate. Our problem, I think, was because of our structural pressures within our own system. Okay. Well, Dr. Subbarao, thank you very much for reminiscing on your days and for being large-hearted enough to not apportion blame to someone else, but to look inward. The pressures of current account and fiscal deficit have not left us. We are still battling it, and at the moment, the rupee is feeling the pressure of slightly heightened trade deficit already. So the lessons are not wasted. I'm sure they've been learned by subsequent governors and policymakers. Thank you very much for joining us in this very special series, Lehman Brothers 10 Years On.